certainly kept our attention as well. And I'm hoping that this next session will keep your attention as well. Again, I reinforce for you, if there is something in the other auditorium that you would like to go and see, please go and do so. I will not be offended at all, and we'll have freedom of movement between the two. Oh, thank you so much. I asked for a cup of tea with just nice plain water, and it has been received. Thank you to the Hyatt staff for that. Alex Passmore, where are you, sir? You up the back? He's striding down the front here. I can do that for you, sir. I can do everything for anyone. Just while we're getting everyone settled, thanks, Peter. Peter, I know exactly what I'm doing as a... I've disappeared behind there. We're just making sure we've got some devices plugged in for some of you. So back to Alex, the gentleman that's come up here on stage for us and is our first presenter in this session. So we're talking Rox Resources, which is rapidly progressing the Unm Gold Project, which closed its operations back in 1997, but they're progressing it towards a return to production. Now, under the direction of this fellow here, the MD, they've grown their resource to more than 3 million ounces of gold, including 1 million near surface, and they're in really close proximity to existing infrastructure as well. I'm not going to cut into more of your time, Alex. Take it away. Would you please make Alex very welcome on behalf of Rox Resources?
Thanks, Chrissy. It's a pleasure to be here presenting on Rox Resources at the RIU Sydney conference once again. We will kick off. There we go. I draw your attention to the disclaimers, in particular the JORC compliance and forward-looking statements. So Rox is a West Australian focused gold explorer and developer with two projects, the Unm Gold Project near Mount Magnet in Western Australia, and the Mount Eureka Gold Project, which is up near Jundee, also in Western Australia. The Unm Gold Project is our most advanced project and is we consider a near-term producer. It has a high-grade, large gold resource, so 3.2 million ounces at 3.6 grams. And importantly, that includes an underground component of 2.2 million ounces at almost 7 grams. The resource is currently sitting at 41% in indicated category. So that's the category of higher confidence that you can convert into a reserve. And a large task for us over the coming 6 to 9 months is to get more of that 3.2 million ounces into the indicated and measured categories. The resource remains open along strike and down dip, so there's ongoing growth likely. However, you know, we're all about increasing the confidence and bringing that resource to fruition. The Mount Fisher project is earlier stage. That's in a remote greenstone belt on the edge of the Yilgarn Craton, and we recently announced some exceptional results from a prospect in the Mount Fisher belt called the Damsel prospect. Where we intersected 16 metres at 7 grams in the middle of a 7-kilometre long gold anomaly. So based on the resource at Unm, Rox is trading at $27 per ounce in terms of enterprise value, which is a very compelling valuation and an attractive entry price compared to the sector. So Rox's strategy is to add value through exploration and development and returning. Well, we have historical producing assets, and we're applying modern exploration technologies to those assets, and finding ounces and growing those resource base. We will be putting out our scoping study in the middle of this year on Unm, with a full feasibility study in the first quarter of next year. So 2 key milestones to look out for there. We're also looking at early cash flow opportunities. We're very mindful of dilution. And there are outcrops and gold sticking out of the ground at Unm, and there are lots of hungry mills nearby. So just turning to the vital corporate information of Rox. So there's 169 million shares on issue, trades at around 40 cents at the moment, which gives us a market cap of $68 million. We have 6.9 million in cash at the end of the March quarter, so we're funded for our short-term activities. We have around 22% institutional ownership, and we try and lift that when we can. And we're strongly supported by Hawke's Point, a very technically focused fund out of London, with 13%. The board is made up of Stephen Dennis, myself, and John Mayer, and we're supported by an experienced management team in Chris Hunt, Matt Antill, and Gregor Bennett. So this team has been progressing our scoping studies and feasibility studies, understanding the financing options that are available to us, and we're in early stage discussions with various financiers, and Gregor and his team are doing an exceptional job growing the resource base. So just checking in where Rox sits in terms of the sector. So I think this the bubbles on here aren't showing very clearly, so I apologise for that. So this is a bubble chart showing enterprise value per attributable resource ounce across comparable companies to us. And so the vertical axis is ranking the companies on the basis of EV per ounce. So that is the price that an investor is paying per ounce. The bubble size, which I apologise is not clear, is the size of the resource. And then the horizontal axis is the resource grade, which you could use as a proxy for the quality of the resource. So what I'd point out is that Rox is very much along the horizontal axis, so a high quality and large resource, and yet is trading at a compelling valuation, i.e. is low down on that vertical axis, which we think won't be the case for very long. You've heard plenty of companies at the conference talk about ESG. It's very much a gate opener for plenty of institutional investors, and something that we all are starting to turn our minds to in a very serious way. So Rox has several goals in 2022 in terms of ESG. We'll be producing our first sustainability insert into our annual report this year. We have a very active ESG framework to roll out this year, and it is an important aspect of financing, an important aspect for the sector. So turning to Unm in a little bit more detail. So Unm sits 140 kilometres by road to the southeast of Mount Magnet. Mount Magnet is a gold producing area owned by Ramelius. We own the project in a 70-30 joint venture with a company called Venus Metals. It's a past producer, produced over 500,000 ounces from open pits and undergrounds, and closed in 1997 when the gold price was 450 an ounce. So obviously with the gold price at 2,600 Aussie an ounce, the prospects for this operation are vastly improved. We've also added significantly to the resource base at Unm, which underpins a restart scenario. There's some existing infrastructure in place, and the most valuable of the infrastructure that we have in place is the decline, which was put in 1997, which goes to 600 metres below surface. So that decline is not backfilled; it's just filled with water. So once we dewater that, we can use that as a drilling platform to then grow our underground resource. As previously mentioned, we've got 3.2 million ounces at 3.6 grams, and the deeper part of that is likely to grow. Check them on the right slide. Yep. So just turning to the mineral resource in a little bit more detail. So we split our resource into near surface, which is likely to be mined by open pits. So that's from the surface down to 160 meters vertically. That's at 1.75 grams, and we will see a large component of that convert into open pit shells, and that will be published in our scoping study in June this year. The underground resource of 2.2 million ounces at almost 7 grams is a stellar resource if you compare that across the sector, and that will likely optimize very well into mining shapes underground. We've seen strong growth in our resource. So when we acquired the project, we had 1.2 million ounces. We've now grown it to 3.2. We've been discovering new ounces for around $7 per ounce in terms of exploration cost, and that compares very favorably to the sector. And that growth has come from along strike extensions and parallel structures that weren't previously recognised. So genuinely new discoveries and good additions to the resource base. Importantly, that the growth in resources has added ounces in key areas where we're likely to be mining. So that improves the prospects of the development. So looking in a little bit more detail at what the resource looks like. So we can see here these two large blocks of colour. You probably can't see the legend from up the back, so I'll read it out to you. So the blue and green and yellow in the more shallow areas is the near surface resource. So that's the average 1.75. and the warmer colors, the higher grade colors in the underground. So that starts at 160 meters below surface and goes to actually 1,000 meters, but the bulk of the ounces are down to around 750 meters below surface. And that averages 7 grams per ton. So you can see there's a high grade shoot component, so northerly plunging shoots, and we've had a lot of success following those shoots down and adding ounces to the resource. So looking at ounces per vertical meter, which is a key metric that you need to look at in terms of early stage developments for gold projects. So we have 4,000 ounces per vertical meter in the near surface resource and 2,900 ounces per vertical meter in the underground resource. So that is a very that's indicative of a commercial development in our view. Just on the metallurgy at UME, so the near surface resource is all oxide and free milling. Nature's sort of done our job there and for us, and all the sulfide. So UME is a sulfide replacement style ore body, and the near surface resource has been oxidized, and that's readily processable through a normal CIL plant. And then the underground resource is still in its fresh rock state, so it's still a sulfide ore body. 75% of the gold in that ore body is easy to get out, and the last 25% is a little bit more difficult. So we need to use slightly more advanced oxidation techniques. But we've chosen a process called the Albion process for our test work, and that shows that we get 92.2% recovery from the sulfide ore body. So there are solutions for that, for the slight quirks in this ore body. So this slide deals with that in a bit more detail, but the main thing to note from this slide is historically the operation used to achieve 33% sulfur oxidation, and they'd get 95% of the gold out. So that is indicative of it not being too tricky to get out. So in terms of a conceptual flow sheet, the oxide material we see going straight to CIL, and then crush, grind, and float sulfides to make a sulfide concentrate that is very high grade. That then gets ultrafine grind, goes through an ultrafine grinding circuit, and then goes into an oxidation circuit in CIL. So there's just an additional step there. But when you're dealing with such high grade material, 7 or 8 gram type mining grades, that those extra steps aren't on much material, and they don't cost so much per ounce. In terms of the infrastructure we have available, we have a good existing camp and call shed and a good spot for the geologists and the technical team to work, and that's important in terms of attracting people at the moment in Western Australia with the labour market very tight. But there are also lots of other things that give us a real head start in terms of development. So airstrips there, ball fields there. It's a disturbed site, so approvals are a bit easier. So just reflecting on our progress over the last year or so, we've drilled 50,000 meters. We've taken the resource from 1.2 to 3.2 million ounces. We've been discovering those ounces for $7 per ounce. We've built out our management team, and we're getting ready to develop the mine. So looking forward, our resource development drilling will focus on the inferred to indicated categories, particularly above 500 meters depth. So that's the important parts of the resource that we will be tackling first. So that's our job for the next 6 months. Looking further afield from you and me, there's significant regional upside. We have 80 kilometers of strike across the belt, and we're also actively exploring regionally. So in terms of next steps at UME, we've delivered substantial resource growth. We don't see that slowing down, but we are moving to that development study phase. I'll just really quickly touch on the Mount Fisher Mountain Eureka Gold Project, which is over near Jundee. We have a joint venture here with Cullen Resources. We hold about 850 square kilometres in the belt, around 500 square kilometres in our own right, and 350 with Cullen. It's a greenstone belt, Archean lode gold. It's very prospective for Archean lode gold. Here's a close-up shot of the belt. We recently reported very high grades from a structural corridor in the southwest corner of that belt, so in a prospect called the Damsel Prospect. So there's a 7 kilometre long gold in regolith anomaly here above 0.2 of a gram. And in the middle of it, we've hit 18 metres at 7 grams per tonne, including 10 metres at 10 grams per tonne. So it's a spectacular result in the middle of nowhere, and hasn't had any serious work done on it since the 1990s. So we're excited about this prospect further out. And with that, I will say thank you for your time. Yes.
Did you want to round that out, or are you happy with that? Good on you, the smiling man. Alex, thank you so much. Is it Greg or Gregory Bennett? It is Greg Bennett. Greg or Gregor. Okay, great. Thank you very much for filling us in on that one. Michael Jones, Dr. Michael Jones has just joined us on the stage here. He's the Managing Director of Impact Minerals Ltd, which he helped to found back in 2006. Mike leads the Impact Exploration team, who are currently focused on Impact's Western Australian precious and base metal projects. Drill programs have recently been completed over at Hopetown, and is it Dunia, the other one? Dunia? So it's looking like a really busy year for you, Dr. Jones. Take it away. Please make him welcome.
Thanks very much. Can you hear me? Can you hear me clearly? That's great. Thanks very much, ladies and gentlemen, for turning up to this session and hearing about the Impact story. Over the last 12 to 18 months, we've transformed ourselves from an Eastern States focused company to a West Australian focused company looking for battery and strategic metals. And so I'm just going to take you through that today. But I wanted to say that those of you who've known of Impact for a while, we're here to find a world-class ore body. I'm not here to find a 50,000 ounce a year gold producer. If I find something like that, we will sell it. And that's what we've been doing as part of our rationalisation of our Eastern States portfolios. We've been moving those projects on through strategic partnerships and through the sale of those assets, whilst we keep our eyes on the focus, which is deliver a world-class discovery and hopefully at least a 10-fold increase on your shares. And at the end of this talk, I'll show you how you can actually participate in the current renounceable rights issue that we've got going on right now over the next couple of weeks. So it's important to keep your enthusiasm once you're looking for a world-class ore body, and it's certainly important not to give up. And as you say, people who've seen me around at these conferences for a while, that's certainly not what I'm looking like. It might look like that, but we're certainly just as enthusiastic as we were on day one. I've got a new team, 2 new geologists that's employed. There are 5 of us in the office now. And there's a whole new dynamic in there, and we are drilling as we speak. So persistence is the key, but you've got to make sure that you persist in the right area. And that's really been Impact's strategy over the years, built on my previous experience at Western Mining, and there's a lot of us ex-Western Mining geologists in here today. And we've looked to put together large strategic gold ground holdings in prospective parts of Australia. And that's certainly what we did in the Eastern States. And at the moment, we've got a strategic partner, IGO, in joint venture with us on our Broken Hill project. And we'll look at that quickly. And then we've been rationalising our other portfolio projects, including we've done 3 sales. We've got about $700,000 worth of shares in junior companies. And we're very close to a deal on our Commonwealth project, which is in the Lachlan Fold Belt, which you'll have heard about over the last couple of days. So that's allowing us then to focus on our projects in WA, where we've put together a portfolio of 4,000 square metres in the last 18 months and in 10 projects. And we've got some exciting times ahead of us. A little bit about the company. Yes, we've been listed since 2006 with 2.2 billion shares on issue and a share price 1.2 cents. And that's giving us a market cap of around about 25 to 30 million. And we've got 1.7 in the bank, and we're looking to raise another 6 on the back of the renounceable rights issue. We've had very strong support over the years from 2 German groups. There's a family office out of Dusseldorf and also a listed investment vehicle, Deutsche Balaton, of which ABC is a subsidiary. And they're an investor in 20-odd companies, mainly emerging producers and developers in the gold space here in WA. Over in WA. So, and the share price that we've been in around about that 1 to 2 cent range for some time now, but we're certainly looking to break out of that. So a quick look at Broken Hill, which is our last remaining active project in New South Wales. And this is an example of us putting together the ground holding here. This is 10 kilometres, and we've got about 800 square kilometres of ground. We're now the largest ground holder in Broken Hill. We surround the world-class Broken Hill mine. Very prospective for copper, zinc and lead, but IGO have farmed into these blue and green tenements out on the outside in through here, looking for nickel, copper and platinum group elements. And there's some reasons for that. We're looking to do something, either a deal or reinvent our exploration in this area here. So RGO have come in, they are spending $18 million over 8 years to earn a 75% interest in the project. It's basically in three stages. They're spending about $500,000 at the moment on a deep seeing EM electromagnetic survey. And then they'll move to stage one. They'll spend a further $6 million to earn 51%, and then a $12 million to earn 75%. That's a great deal for us. As it turns out, the EM survey, which is producing some very good results, has probably cost twice as much as RGO were hoping. It's been more difficult to do that work. So we certainly did the right decision getting the joint venture partner in. And the reason they're interested in this project is that is this material here. This is the massive sulfide you'll have heard quite a bit about. And it's worth reading out the grades here because they are probably this is probably some of the richest ore in Australia, if not the richest bit of ore in Australia. This is an ounce of palladium and platinum together. It's got 1.5 grams of gold. It's got 15% combined nickel and copper, 1.5 ounces of silver, 0.2% cobalt, and it's got 1 to 2 grams equivalent, each of rhodium, iridium, osmium, and ruthenium, which is the rare PGEs. You can count on the fingers of one hand where you get that type of material around the world, and that's why we were interested in this project in the first place. This material is very conductive, and IGO have been starting their EM survey over this 9-kilometre trend, the Morkai trend, which is basically dripping with high-grade PGMs over the entire trend, but has only ever been seriously explored down at the southern end. And they've identified a significant conductor at this position here, and they've got about 80% of this survey to go, and another area twice the same size to go to complete the survey. So we're confident they'll get some more conductors as we go, and they'll probably be drilling these towards the end of this year, although they've yet to sort of confirm that they will do that. And in terms of geology, that was very exciting for us and certainly for IGO because the current trendy model for this style of intrusion that hosts these material, which Glandular, the Julimar discovery is one. A lot of the smoke that we kind of see along this trend here is where material has come out of something like this, a major shear zone from depth, and these things have come straight from the mantle. That's why they're rich in PGEs, very hot gaseous material, comes up, flattens out, and then we get the sort of drop down and we get the massive sulfides in the throat within these structures. And so this EM conductor they've identified here fits that model beautifully. It's buried about 350 meters below surface, and it is of decent size, and we're going to be excited when they start drilling that. But really the big story right now is what we've done over the last 18 months. So we've put together 10 projects, about 4,000 square kilometers for battery and strategic metals in our home state of WA. We own the Arkan and the Bow projects 100%. We recently announced 4 joint ventures with one group, and we had a pre-existing gold project at Dunia, which are on 80-20 deals. These were very cheap deals for us. We only spent $60,000 cash in total to get into all 5. And we're basically free carrying our partners to a decision to mine. We've also got 2 acquisitions in store, haven't signed the paperwork yet, but those will be coming on, and then we'll have completed the transition. And I won't talk about it, but a lot of the anomalies you're going to see in the next few slides have been driven by new technology, which has absolutely blown my mind. And I've been in this game a long time in terms of geophysics. And most of the anomalies that you see and that we're drilling are a result of that. And it's given us an extraordinary industry-leading hit rate in terms of the geochemistry anomalies that we're seeing associated with the geophysics. You can come see me on the booth if you want to find out more about that. Now, for some reason, this is not pressing forward. How hard? Oh, no, gotta go back now. Okay, back on track. So this is our Arkan project and Bow, just to the north and through here. Oh, actually, no, sorry, we've just got to go. I think all the time I was pressing it. There we go. So just zooming in on our Arkan and Bow projects in through here. We picked this up because it's on a major structure that sort of trends up into the platinum group rich area. Here's Julimar, Yarrawinda, Mora that you'll have heard about. There were some regional scale sort of copper, nickel and gold anomalies on this project. We announced this to the market at 9 o'clock on a Friday morning, and at 1 o'clock that afternoon, Anglo American Corporation, one of the world's top 10 mining companies, staked 10,000 square kilometers all around us. And it was obvious they'd been thinking about getting into this, but we picked them to the post. So that's all exciting. They've got a big $3 million airborne survey going on around here, and we're going to tack on to the end of that later this year. This is what Julimar looks like at the scale. It's about 2 kilometres, and there's multiple magnetic anomalies all through this region that are similar size and shape and probably origin. And you'll see a lot of that I'm sure there'll be more discoveries in this region as a result. Here's our first sort of batch of soil geochemistry anomalies at Arkan, only taken along roads and traverses. And these are combined anomalies for nickel, copper, and the platinum group metals and gold. And about a very high hit rate of 6 high priority targets, plus about 4 or 5 medium priority targets out of the 15 that we tested. Very high hit rate. This is just an image of close-up of some of these over gravity. These dense areas here suggest there's mafic rocks, which are our targets. These little circles in through here are 100 metres apart. So we've got anomalies here, they're 600 metres long, 200 metres wide, wide open. Similar things here along the roads and traverses. At the moment, we're doing land access agreements around here to be able to get into these areas, and we'll be following them up later in the year. We've got about 30 agreements in place. It's a little bit time consuming, but we're certainly pushing through it. A pleasant surprise out of that was that we then actually found some significant lithium anomalies. And so 6 priority areas there. Again, we're working through those. There's never been any drilling in this area, never been any previous exploration of significance. And so this really is virgin territory, even though we're only 150 kilometres outside of Perth. Same story here. This is on the magnetics. These anomalies are hundreds of metres wide and, as I say, never been touched. So we think we're onto something exciting. On the basis of that and the work that we've been doing with this particular group, we farmed into one of their projects, which was adjacent to Arkan. One line of soils along through here, through another road, generated a number of anomalies again for nickel, copper, PGE, lithium, and we've got rubidium and rare earths in through here as well. And there's a couple of nice rare earth targets on Arkan as well. So we created a significant amount of work. Oh, there's the rubidium for you there. Significant amount of work for ourselves just on that one project. We've done these other joint ventures, of which Hopetown is the standout, and we're drilling at the moment. And that's because a couple of these anomalies we've been testing, Top Notch and Silver Star, were fully permitted for drilling. We're trying to get programs of work in place to drill these other 4 targets that we've got here. And we're testing the geophysics. We've intersected at Top Notch definitely some low-grade copper in one drill. There's a handful of drill holes into one small area. We're waiting for some geochemistry. We think it's a broader area, but Silver Star is where all the focus is at the moment. The drill is turning as we speak. We've intersected some sort of altered shear zone in the first drill hole, which we've announced. It's got some low-level sulfide in it. It'll be a while before we get the assays back, of course, but we're cutting the core, and we hope to be able to see what's in there in a bit more detail over the next week. We also announced in this area we found the first spodumene. Spodumene fluoresces in ultraviolet light, so it's a beautiful, pretty picture of that. That was taken in the dark cupboard in the office, and we're all very excited when we saw that all light up. And it's the first occurrence of lithium south of this major fault here, and south of this greenstone belt here, which is Ravensthorpe. Again, you might have heard of that, but this is the Mount Catlin operating lithium mine. There's an operating nickel laterite mine. Medallion Metals have got their gold, copper, and we think we've got the mineralized extension of this, and there is no drilling south of this fault. So this is all virgin territory, and it's one of our 80-20 joint ventures. So if you'd like to participate, we're running a renounceable rights issue right now. So for those who are existing Impact shareholders, it's a 1-for-4 offer, and it's at 1.1 cents. Certainly was a reasonable discount when we announced it. You're also going to get a 1-for-2 free attaching option exercisable at 2 cents with a 2-year term. And only the week before last, we were trading at 1.8. So that was almost in the money. And the rights then are tradable. So you can buy right now IPT RA at a price of about 1.3 cents, which will give you the share and also the option. And so if you're not an existing shareholder and you've missed out on the rights issue, you can buy those rights and get involved. And those rights will trade until May the 13th. And really, it's a fantastic opportunity. I've done it for 2 reasons. All these projects are early stage. I'm trying to fund myself for the next 2 to 3 years. Full on, flat out exploration. If we get a discovery, great, no problem. The options are bringing in another $5 million. And also, as you've heard from Sean this morning, I think tough times are coming. So we're trying to shore up our bank balance, make sure that we can remain active. We're raising money now before things get really tough, as I think they might do in the middle of the year. And that's it. That's the story. We've got drill results to come from Dunia that we did earlier this year. There's diamond drilling in progress at Hopetown. We've got a lot of soil geochemistry to come. We've been pumping those samples out left, right, and centre. based around this new technology. We're getting an incredible hit rate, and we're still very active with the deals that we're doing on our Eastern States portfolio. And please come and speak to me at the booth if you'd like any more information. And 3, 2, 1. Thank you.
And that's why you're Dr. Mike Jones, trust him. And that was an interesting step at the end there. And it's interesting, isn't it, now to listen using the thought process that Sean gave us this morning as well, as far as our investing goes. Many of you are probably years ahead of me in that respect anyway, so I do bow down to you. We're going to head over to lithium now. Lithium Energy was one of the most successful IPOs of 2021, and their executive chairman, William Johnson, is joining us to tell us just what makes Lithium Energy stand out from the rest of the battery minerals companies who are presenting here this week. It's a dual presentation. He's brought with him a small but very knowledgeable associate. Would you please make both of them very welcome?
Thanks, Chrissy. Thanks, everyone. As Chrissy said, I brought a friend of mine back from Argentina. His name is Larry the Llama, and if we have time at the end, I'll explain why the lady llamas love Larry the Llama in Argentina. Okay. So as Chrissy said, for those of you that were, I guess, paying attention, Lithium Energy was one of the best performing IPOs of 2021. Now, I don't know about you, but when I look at a graph like that, I think, gee, these guys must have had some great drilling intersections during the year. We listed about this time last year at 20 cents. As you can see now, up to $1.40. In fact, yesterday up to $1.65. But no, we haven't drilled a single hole. So what's behind this tremendous interest in our company? Well, there's 3 things. Firstly, we have 2 tremendous projects: our Solarwire Lithium Brine project in Argentina and our Burke Graphite project in Queensland, which together give us something unique amongst all the ASX-listed battery minerals companies, in that we're the only ASX-listed company that has significant exposure to both lithium and graphite, which are the 2 key ingredients for lithium-ion batteries. And I'll be focusing most of this presentation on these 2 projects. Of course, this is all occurring in the backdrop of the electrification of vehicles. I'm sure you've seen these kind of slides before, so I won't dwell too much on the next 2 slides, but it's all about the growth in demand for electric vehicles. Electric vehicles need batteries. The current prevailing technology for batteries is lithium-ion batteries, and the 2 key ingredients in lithium-ion batteries are lithium and graphite. A little known fact that in most lithium-ion batteries, there's about 10 times more graphite in the battery than lithium by weight. Also, I guess on the back of this increasing forecast demand for electric vehicles, the price of lithium has just gone crazy over the last couple of years. In part, that's clearly been driven by not just the expectations of increased demand for batteries for vehicles, but the significant stimulus that's been given by all the governments or major governments around the world, out of Europe, China, the US. They're all pumping tens of billions of dollars into supporting and driving this new electrification industry. So I'd like to now focus on our projects. The Solarwire Lithium Brine project, this is located in Argentina. This is a shot which is, oops, let me just go back a moment to find the pointer. This is the northwestern area of the Solarwire Salar, where we are just about to start our major exploration program. If you're going to be into lithium brines, best place to do it in the world is Argentina. Why Argentina? Well, the world's largest reserves of lithium are currently found in the South American Lithium Triangle, which incorporates parts of Bolivia, Argentina, and Chile. Bolivia and Chile are particularly difficult to develop due to government and other political issues. And so Argentina, of all the countries in the Lithium Triangle, is by far and away the easiest place to advance a lithium project. It's also where, Argentina is also the 3rd largest producer of lithium in the world, behind Australia and Chile. And lithium brine projects in Argentina are typically amongst the lowest cost on the lithium carbonate cost curve. Lithium brine projects generally have significant advantages compared to the hard rock lithium projects that are typically found here in Australia. The operating costs are lower, it's a much simpler production process, and they're more environmentally friendly. There's a much lower carbon footprint. The production process is fairly straightforward and well proven. It starts off by pumping up lithium-rich brines from subsurface aquifers that can be anything from 200 to 600 meters deep below the surface. The brine is then pumped into large evaporation ponds where it's left for 12 months or so, where the sun does all the work to concentrate the lithium down to a concentration where it can then be processed to produce lithium carbonate for then shipping to customers. So it's the ultimate solar-powered green production process for producing lithium. So what makes the Solarwire project so special? Well, it's all about location. We have secured 12,000 hectares of tenements which are directly adjacent to or surrounded by Alchem, or previously known as Orocobra's, current producing project in the Solarwire Salar. Alchem, as you probably know, has a market capitalization of around about $8 billion, most of which is attributable to this particular project. We're also adjacent to the Solarwire's Cauchery project being developed by Lithium Americas Corporation, who have so far invested $500 million in developing their project, which is down to the south of the Salar. Our concessions, our tenement package is in the red here. These yellow tenements are the ones held by Alchem, and the blue tenements are the ones held by Lithium Americas. So you can see we're surrounded by these two very large corporations who are developing massive projects there, and the Alchem one producing from here has been producing lithium since 2015, currently producing about 25,000 tons of lithium carbonate equivalent, and are planned to expand that and almost double it over the next couple of years. And Lithium Americas are planning to commence production this year and move to expand production to up to 60,000 tons per annum in a couple of years. One of the nice things about this particular salar is it's got very favorable climatic conditions to support evaporation, which has been demonstrated by Alchem's production facility, and it's got great infrastructure. There's paved roads all the way to the project and gas pipelines. So it's a really well-supported area for developing a lithium brine project. We've put together an exploration target of up to 8.7 million tons of lithium carbonate equivalent at grades between 500 to 700 milligrams per litre for lithium for the Solarwire project. Now, to put that into context, that's comparable with the JORC resource that Allkem have. Up until about a month ago, their JORC resource was about 6 million tons of contained lithium carbonate equivalent. So we're looking at defining a resource that's comparable to that which Alchem had, and they're an $8 billion company. We've developed a very detailed conceptual model, which is pretty straightforward. Essentially, we're located on what's known as the alluvial fan here, which is essentially deposits that have come down the mountain and formed over the top of the lithium-rich aquifers that sit below. So we have to undertake, or our plan with exploration is to commence a program of geophysics and drilling essentially here to drill down, tap into that lithium-rich aquifer, and define a resource of our own. Here's just a photograph taken from the northwest of our package, and in the distance there you can see how close we are to the Allkem production facility. So why are we so confident that we're going to be able to define a big resource there? Well, we've had the benefit of being able to see and interpret the results that have been done previously by Orocobre, or Alchem as they're now known, and Lithium Americas. They've done a significant amount of geophysics and drilling over the years on this salar, and fortunately for us, they've run some geophysics and gravity lines very, very close, if not directly adjacent to some of our concessions. And the next slide will show this in a lot more detail, but essentially what their geophysics and gravity studies show is that the brines, the conductive brines, clearly do extend underneath this alluvial fan into our concessions. So it's probably a bit clearer for you to see here. This is a, oops, again, hit the wrong button, I apologize. So this is up the northern part of our concessions here. This was a AMT survey done by them, I think back in 2011. Those are our concessions there, which are there. And you can clearly see from this chart here that the interpreted lithium-rich brines extend all the way into our tenements there. And the same here on the west. That's our concession boundary there. And you can see the brines extending here. So from all the work that we've seen that others have done on this salar close to our concessions, that's what gives us the confidence that we're going to be able to define a significant resource there. So where's the project currently sitting? Well, we've finally managed to get environmental approvals to start our work program. These came in a couple of weeks ago. So we're all set to run a program of geophysics first, followed by about 5,000 to 6,000 meters of drilling, which we would hope to complete by the end of the year, and will go a long way towards helping us define a maiden resource at Solarwire. We've started the process of building a local team there, and my colleague Pete Smith, who's on the stand as well, will be heading back over to Argentina next week to help build the team and oversee our exploration program as it kicks off. But as well as lithium, the Burke Graphite project really is quite an exceptional project as well. This is located in Queensland, and it's one of the highest grade graphite projects held by any ASX listed company. We have already defined a resource on this project of 6.3 million tonnes at an exceptionally high grade of 16% graphite for a contained graphite of approximately 1 million tonnes. Within that 6 million tonne resource, there's over 2 million tonnes at over 20% graphite. And you know, as you probably know, most of the large graphite projects out of Africa typically have grades of 5 or 6%. So this really is an exceptionally high grade project. We've spent a lot of work. We've been working with CSIRO to run test work on the graphite, who have confirmed its suitability for use in lithium-ion batteries. We've also been able to produce graphene from the graphite, which also is a key additive for some new types of batteries. The project's located in a very favourable jurisdiction in Queensland, and because it occurs from surface, the project will be very amenable to simple open pit mining. In addition to the deposit that we've defined at Burke, we also have further exploration potential at a nearby prospect called Corella, which we're also about to do some drilling on in the next couple of months. One of the things that really excites us about this project, though, is not just the potential to mine the graphite and sell it as a concentrate overseas, but to potentially add some significant additional value through developing a downstream processing facility in Townsville for producing purified spherical graphite. Now, the purified spherical graphite, or PSG as it's known, demand for that is set to increase tenfold over the next decade due to the electric vehicle sort of demand. Most PSG currently comes from China, and they tend to use not sort of great environmentally sustainable methods for producing it. So there's a great opportunity in Australia to meet this forecast extra demand for PSG through producing it right here in Australia. We've got some great technical capabilities here, some good government-funded initiatives to support it. And because of our location, we're ideally located close to Townsville, which is rapidly becoming a centre for battery production, or the energy chemicals hub, which has been established in Townsville. So for next steps for Burke, we're furthering our test work on the graphite with CSIRO. We've got about 5,000 meters of drilling planned at both Burke and Eureka to advance the definition of those resources. In terms of the team, we run a pretty tight team at Lithium Energy. Myself, Pete Smith, who heads the technical side of things, and Pete's just about to head off to Argentina end of the week. So if you want to have a chat with him, now's your last chance, and he'll be on the stand this afternoon. So in summary, we have, I guess, a unique position, as I mentioned at the outset, in that we're the only ASX company with significant exposure to both lithium and graphite. We're just about to start a massive, very large exploration program at Solarwire in Argentina. And don't forget the graphite, which is a key component with EV batteries. And we've got a high quality resource in the Burke deposit in a very friendly jurisdiction. And that's it for me. Have I got time to tell the story about why the lady llamas love lithium, Larry? Yeah? Okay, so why do the... I gotta get this right.
This better be good.
Better be good. Okay, so why do the lady llamas love lithium, Larry the llama? Well, the reason is lithium Larry, as he's known to his
Got a
friends,
spark about it?
he grazes around the edge of the lithium-rich Brine Lake, the Olorod Salar.
Is this true?
It is, and by ingesting the lithium ions, you see the Energizer Bunny, he can go all night. Okay.
You should tell the punchline. You should tell the punchline at your booth, then people have to come and find out the...
Anyway, that was the punchline.
Oh, was that the punchline?
Yeah.
Jeez. Go on with your
I will
punchline.
repeat it. The
Get
ladies love
Get on.
the ladies love Larry the llama
Yeah.
because of the lithium ions that he ingests enables him to go all night, like the Energizer Bunny, only a llama.
Oh, wait, no,
Anyway.
fantastic. Put your hands together for William and Lithium the llama. That was it. I was waiting 16 minutes for that. Actually, the whole presentation was brilliant. Thank you so much for that. William Johnson, Lithium Energy. Corazon Mining, come up here and get us excited, Brett. Now, Corazon is a minerals explorer with projects in Canada, in Australia. They've got a battery metals focus of nickel, copper and cobalt. The company's main asset is the Lynn Lake project, a proven major nickel sulfide camp in Canada. Brett Smith is Corazon MD, and he's, let's welcome him to bring us up to speed on the two projects they have. Thanks, Brett.
Thanks, Chrissy. Welcome everyone to the Corazon Mining Talk. If you want a copy of the presentation, it's on our website. It's been released on the ASX platform, and it's also at our booth if you want a hard copy. Right, as Chrissy said, ASX listed junior focused on nickel, copper, cobalt. I'm only talking about our main asset today. That's the Lynn Lake nickel sulfide project in Canada. The other two assets, the Mount Gilmore asset in New South Wales and Miriam and Western Australia, very good exploration, early stage exploration plays in their own right, but we've only got so much time. So talk about Lynn Lake. We first got a foot in the door in Lynn Lake in 2010, and we had the desire to be part of, I guess, the consolidation of the nickel district. And we saw a kind of a similar environment to what was in Kambalda in the early days when, excuse me, companies like IGO got involved and Mincor and things like that. So that was 2010. Middle of 2020, we announced that Corazon had secured the entire ownership of the nickel district, the old mining centre, and all the exploration grounds. So that was a very challenging time to do it. Nickel price was down to around $4 or $5 a pound at that time, and there was very little investor sentiment for nickel sulfide or nickel in general. So it was almost counter-cyclical. But time's is right now. Nickel's up around $14 or $15 a pound. The forecast demand for nickel, copper and cobalt, in fact, are quite strong off the back of the rechargeable battery sector, but also there's continued growth in the stainless steel industry for nickel. We're well funded. We've got about $9.5 million in the bank, and our share registry has changed in recent months. We've got Delphi, a large German insto that invests a lot in resources in Australia. They're on board, and Blackstone Minerals, ASX listed, got nickel sulfide assets in Vietnam, and they're working with South Korean battery makers to become vertically integrated in the battery sector. So two very supportive groups, and the same, I guess, concepts and attitude to Lynn Lake that we've got. So it's great to have them on board. Lynn Lake, old mining centre, as I said, the township of Lynn Lake was built for the mine back in the 50s. It's got 2 hydro schemes there, so very cheap power that were built for the mine themselves and supply the district with electricity. We have rail link to all the North American rail grid. The top 100 kilometres hasn't been used since 2005, but it's in still very good condition. In fact, Lynn Lake sitting in a very good place. There's even a major nickel centre at Thompson owned by Vale, and the rail link between Thompson and Hudson Bay has just been refurbished, and they're taking loads now. And you imagine the rail link linking us to North America, but also the link via ocean to Europe and North America is also available through Hudson Bay. The 2 growth sectors for the rechargeable battery sector and electric vehicles is North America and Europe. Prolific producer of nickel, mine for 24 years, about 1 million tonnes per annum, a very labour intensive operation. There's about 3,500 people that lived in Lynn Lake. They only had 1 diesel locomotive underground that trammed the ore from the Farley shaft across underground to the A shaft, where they hoisted it to the processing plant. And apart from that, all the ore movement was either gravity or manhandling. So, but they still developed the project down to about 1,100 metres below surface. This is the image on the right is an interpreted geology image. The purple things are these mafic, ultramafic plugs that are barreled up through the country rock, and they brought up the nickel sulfides with them. We've just created a long section. This is a mining area, the A plug and the L plug. We just created a long section through that. You can see the L deposit right through to the whole A plug system. So there's 20 deposits in that area, and we've got resources on only 6 of those. And we report 16 million tonnes for about 116,800 tonnes of nickel metal. Corazon's market cap, $20 million. What value is this for Corazon? I'd say very little. We're seen as an exploration company, and these are high quality resources. These are 80% indicated or measured or better kind of resources. They've been drilled out. They were being mined before the mine shut in 1976. We don't have to go and spend millions and millions of dollars in drilling this thing out. It's already done. But just say you've attributed all our enterprise value for Lynn Lake to these resources, it equates to about $60 per tonne of nickel. And the current nickel price is plus $32,000 a tonne. So very little, as you can see. And that's what groups like Delphi and Blackstone see. They see us undervalued. They see us as an investment opportunity initially, and they see with the nickel price where it is, we're moving from a true explorer to a project developer as well. With the injection of, I guess, capital, we can put more focus and more capital towards the redevelopment opportunity. What a lot of people don't realise that there's been several feasibility and pre-feasibilities done on Lynn Lake in the past. The most recent one would have been by the previous owner, 2008, 2010, where that pre-feasibility study recommended they go into full feasibility. Post that, the nickel price went down, and of course we've ended up with the project. But you'd think that if this asset was in Australia, this would be mining at the moment. We did a similar kind of thing in-house in 2016. We took a different approach. We tried to kill it. We loaded up the OPEX with as much cost as we could, taking a lot of the cost of your capital, moving it into the operating cost. We ended up with an OPEX of about 0.67% nickel. So we think quite high. It still didn't kill it. So in that conceptual study, it produced about 8 million tonnes, okay, over 8 years. So the thing we saw with this is that they're the 2 main deposits. You can see there, the N and the O deposit, and that's a conceptual mine design. Those shafts are actually there, they're ventilation shafts, but the decline and all the developments are all conceptual. There's 243 stopes in there. So what this increasing the OPEX has done is it's picked the peas out of the pod. As you lower that OPEX and your costs, and you incorporate it into your mine plan, you start to get these stopes joining up together, and they come together in geological forms that make sense. And if you can continue to reduce your OPEX or your cutoff grade, you start to, the stopes start to come towards geological boundaries like faults and things like that. And I'll just go back as an example. So we've got 16 million tonnes in this resource at 0.5 cutoff. If we drop that cutoff to 0.4, we've suddenly got 30 million tonnes in resource. And that's how we see Lynn Lake. We don't want to go back and do these studies and do things how they were done in the past. We believe this is a large tonnage, low-cost mining operation, and you can benefit from automation, electric vehicles, and the list goes on. So that's what we're doing. The unfortunate thing with these old mines is that not a lot of information was recorded. So while we believe and the ground conditions are excellent. And geotechnically, we have no problem with these big voids underground and larger development and things like that. We don't have the empirical numbers to hang a hat on. So that's what we've got to do now as we go forward with exploration and mine development studies, start acquiring this information to build up, I guess, the quality of the study work. As I said, we're very much labelled as an explorer, and this, I guess the image on your right there is an aeromagnetic image of our entire project area. You can see the main mining centre up there. When we acquired the main mining centre in 2016, we inherited 75 years of exploration data, all in paper format. Going through that data, gems were occurring all the time, but one of the main things we saw was this Fraser Lake complex about 5 kilometres to the south. It's twice as big as the A plug as an intrusion. It's got all the right chemical and physical characteristics that say it should host these nickel sulfide deposits. And the image on your left there is a cut through our 3-dimensional magnetic models at about 250 meters below surface. And you can see that very eye-like feature, similar to what I guess Sirius with the Nova Bollinger discovered, identified in Western Australia. These things can have a very eye-like alteration type look to them. As far as size goes, Nova Bollinger, that probably's got a metal endowment between, I'm not 100% certain of this, but 300,000 tonnes and 500,000 tonnes, I think it'll end up as. And if you talk about size of these intrusions compared to something like that, it's quite difficult. But I can relate it to something like the most famous nickel discovery in recent times would be Voisey's Bay in Canada, discovered in 1993. 2007 had a nickel resource, a resource of 141 million tonnes at 1.66% nickel. So that's about 2.4 million tonnes of nickel metal contained. They're pushing that deposit now to be 45,000 tonnes of nickel produced per annum and 20,000 tonnes of copper production per annum. So an incredible deposit. You can fit the entire Voisey's Bay system inside Fraser Lake. So that's not only the deposits, that's a whole magmatic system that makes up Voisey's Bay. So Voisey's Bay is about 3 kilometres by 1.5 kilometres. This is 5 kilometres by 3 kilometres. Okay, so it's a big system. So don't be deceived by this little thing you see on the screen here. And it's fertile. We've drilled it. There's a lot of sulfide here. Now these are some incredible photos. 3% nickel in massive sulfide. These little balls of sulfide you see there run 6 to 8% nickel by themselves. So we know it's an ore forming system. We've also had big intersections like 20 meters at 0.7, 50 meters at 0.4, that kind of thing. What we haven't hit is a big accumulation of high quality, massive sulfide type mineralization. It's a very dirty place to explore. There's a lot of false positives in the geophysics, and it's a very thing to interpret and target your drilling. And we're learning. We're doing a lot of different geophysical methods. We're using innovative methods, and even this year we've completely changed the model for Lynn Lake, and this is an example of what we're doing now. So the image on your left is nodes magnetics. Image on the right is gravity. So at the start of the year we did detailed aerial gravity, 100 meter space lines, continually sampled data. It is exceptional data, and the gravity image you see there is completely different to the gravity image from the old data, which was 200 meter space points. And what we see here, these almost pimples of denser rocks, and they're actual pipes that we've just cut a section through, and they're scattered through there. There's probably 8 to 10 targets that have never been drilled in this area. In fact, none of these dense bodies have been drilled. What could they be? Well, in the mining centre, your mineralisation, your massive sulfide, is associated timing-wise and spatially with more ultramafic rocks. And these ultramafic rocks are denser. They're denser than the gabbros, which host the greater system. And that's what we're looking at. So if I now take a cross section through where that yellow line is there, that's your magnetics. You can see at depth there's a strongly magnetic body, and you've had these things coming up closer to surface. This is a gravity. So these, you see the same kind of thing, dense rocks down there, fingers coming up that never been drilled. There's never been ultramafic rocks identified in the Fraser Lake complex yet, and we're drilling these things at the moment. So we do have a drill rig on site. We've hit sulfide, we're hitting magmatic sulfide, that's a given. We're drilling in Fraser Lake. We're also hitting these annoying barren sulfidic sediments as well. Early days, we haven't seen what's causing these dense anomalies yet, but again, we've just started drilling. This drilling will go on for the next 2 or 3 months. Okay, so that's just 4 targets that we're looking at. With the additional funding we've got, we're looking at expanding that not only in Fraser Lake, but there's a whole range of targets we've got between Fraser Lake and the mining centre. Right, that's it, almost. ASX listed, focused on forward-facing metals where the forecast demand for these metals are quite strong: nickel, copper, cobalt. Our core project at Lynn Lake has no value appreciated to the resource areas. We're putting a major focus on that while keeping our exploration focus going. Lots of news going forward, so I'd like you to keep an eye on us at a minimum. Thanks very much.
Thank you, Brett. And if you want to have further that chat, you can go up and have a coffee. Up near there, our booth is up near the coffee booth up the back there. Good to see a couple of you moving around and changing rooms and coming in and going out as we speak. Are some of you still a little bit cool? Just I've got management up the back. I just want to voice you're cool. Yes, 1, 2. There's a couple of us. 3, 4. Good. Some blokes are backing me up as well. See, management, it's a little bit cool in this room, and we like to make sure you're all comfortable here. We've got a 45-minute break coming up for lunch after our next 2 presenters. In the other room, we've got Alvo Minerals and Rox Resources, that's AAR, presenting coming up next. But right here, we have got 2 very exciting ones. David Leavy is going to join us on stage, ChemX. And ChemX is focused on providing critical materials required for electrification and also decarbonisation. And these guys have taken a slightly different approach in that they are vertically integrated and they're looking to produce critical materials necessary for movement towards sustainability. And now for the story, MD David Leavy. Please make him very welcome.
Thank you, Chrissy, and good afternoon, everyone. Welcome to this presentation on ChemX Materials. As the usual disclaimer, as Chrissy mentioned, ChemX Materials has a strategy of developing critical materials for the electrification and decarbonisation markets that are only just starting to develop. Our current portfolio consists of a new and unique technology to produce high purity alumina. And we've got 2 tenements on the Eyre Peninsula in South Australia, which have manganese, where we're looking at producing a manganese sulfate material for battery cathodes and for kaolin. Now, this is the public unveiling of our corporate video, which we released this morning.
Forecast to grow into a near $1 trillion industry by 2028. High purity alumina, more commonly known as HPA, is a key ingredient needed in the batteries that power every one of these vehicles. HPA is also needed in the rapidly growing semiconductor and LED markets, with global demand already projected to outstrip supply. And now, ChemX Materials has the technology to produce high purity alumina right here in Australia. A unique and sustainable process that not only capitalizes on that demand, but is expected to have a significantly lower carbon footprint than other competing technologies. Having just raised $8 million through an oversubscribed IPO, work will commence on the ChemX iPura HPA technology, the development of a pilot plant to produce HPA for offtake partners, and 2 exploration projects that include kaolin and manganese, all on the Eyre Peninsula in South Australia. The iPura technology is designed to be scalable and modular, allowing production to be localized close to the end buyer. This shortens the logistics chain and reduces the carbon cost of supply. The exploration projects on the Eyre Peninsula are targeting manganese for lithium battery cathodes and kaolin, which has growing uses in decarbonising many industrial processes. Decarbonisation and sustainability are at the heart of our strategy, helping to reduce the carbon footprint of our industry and being at the forefront of new technologies that are yet to be developed. ChemX Materials is well on its way to providing the world with critical materials that build a cleaner, more sustainable future.
So as you can see from the video, our strategy is very much focused on developing materials that help the decarbonisation process. And if the next slide will come up. Sorry. Just while the IT guys are working on getting it up, getting the presentation back on schedule. The next slide was really about the family of technologies that the sustainability market actually entails. Hopefully we'll have the graphic up soon, but it's a broad range of technologies that span batteries, the electrification process, renewable energies, industrial production processes. There's McKinsey have come up with about 10 different families of technologies that we make up the sustainability market. We've got exposure to 5 of those markets just with the projects that we currently have, and we've potentially got exposure to another 2. So quite a wide variety of markets. They've all seen huge investment, inflows in funds, and also into new technologies. So the markets are growing very rapidly, and they're also seeing quite a bit of technological innovation. And that opens up the opportunity for a company like Chemex to take advantage of those, the changes and the growth as well. So. The high purity alumina technology sorry, they're waving at me at the back. The high purity alumina technology is unique amongst the existing producers, and also some of the technologies that you may have seen. All right, we'll start here. So we'll skip the page that McKinsey have put up with their technologies. Sustainability is really at the heart of what we do. The markets we're selling into are very focused on sustainability, and we're at the lucky position of being at the start of our project development journey. We can build our sustainability framework around our project development, so we're not having to retrofit sustainability into something that we've already got. We listed on the ASX in January this year. Since then, we've been continuing work on the high pure HPA technology. We've got a micro plant that is commissioning at the moment that has the capacity of about 5 kilos a day. And we've got Primero doing a pre-feasibility study on a pilot plant, which will have the capacity of about 1 tonne a day. That feasibility study should be due by the end of this quarter. And on the Eyre Peninsula, as I mentioned, we've got 2 tenements there that have manganese and kaolin deposits. Just on the HPA market, HPA is a critical part of every battery chemistry. It's coated on the separator. The growth in demand from the battery sector is very similar to the growth in EVs. So we're expecting very strong growth over the next 5 to 10 years. The other key market is for use in synthetic sapphire. Now, synthetic sapphire is used in LEDs, semiconductors, lasers, and a number of optical components. So if you've got an iPhone, the lens on the camera in the iPhone is synthetic sapphire. So it's quite widely used, and the demand is looking very strong from that market also. The technology that we've got to produce high purity alumina, what makes it different? It's scalable, so we can start off small and increase production as demand grows. We expect it to be lower capital operating cost. It's independent of mine production, and the key aspect of that is the time to market. We don't have to wait for approvals from the government and the development timeframe for a mining operation. It uses an aluminous chemical, which we can buy off the shelf. And it's also modular, so we can put production facilities close to the end buyers to reduce the carbon footprint of the logistics chain. The next steps for the high pure HPA technology, we're commissioning the micro plant at the moment. We've got the pre-feasibility on the pilot plant, which is due at the end of by the end of this quarter. That'll allow us to start the qualification process with buyers and start at the marketing with buyers in earnest. On the Eyre Peninsula, we've got 200% owned tenements. We're about 120 k's to the west of Whyalla, so from a logistics and a access point of view, in a very good position. The key point to note on this is that bottom point there on rare earths. The map there is actually from our neighbours, Altech Minerals. They've discovered ionic rare earths all around our tenement. Now, none of the kaolin on our tenement has been assayed for rare earths previously, but from our recently finished drill campaign, we will be getting obviously the assay being assayed for rare earths. The geology and in some cases the same deposits run across both Altech Minerals and our ground, so we're very confident that we'll actually have a rare earth ore body there at some, following up work. The recently completed drill program, you can see the quality of the kaolin there on that second one from the left. That's over 50 metres depth of very high quality white kaolin visually. We need to wait until the assays come back to confirm it, but it was white kaolin pretty much from top to bottom of the hole. The Jameson Tank Manganese project, it's been explored by a number of people. Western Mining was probably the most active explorer there through the 90s. The ore body itself is not amenable to a direct shipping project, but the mineralogy that we have is very amenable to processing. So the previous owners of the tenement produced a manganese, electrolytic manganese dioxide material. Upgrading that to a manganese sulfate is a similar process. So we've almost completed the first stage of test work on that, and the results to date have been very positive. And out of the recently completed drill program, we've got a couple of 100 kilograms of material going across to Perth to do the second stage of that test work, where the aim will be to produce a high purity manganese sulfate material. Why manganese? It's the poor cousin in the battery chemistry, but a few of the larger auto manufacturers, Volkswagen, Tesla amongst them, have come out over the last 12 months and said they're looking to increase the percentage of manganese in their battery chemistry. That's for a couple of reasons. It's cheaper than cobalt and nickel, but it also reduces the amount of cobalt you need in the battery, which reduces the ESG implications of buying cobalt out of Africa. So the next steps on that, we're waiting for the assay results to come back, and they should start to come back in the next couple of weeks. There'll be a follow-up exploration to further delineate it. The test work for the cathode material will be ongoing, and that's really the focus for it. So whilst we're looking at a vertically integrated project, assuming we get all the positive outcomes from the exploration and from the study work. And on the kaolin project, again, we had the exploration program, which we completed mid-March. We're waiting on the assays back from that, including on the rare earths. But the real focus on that deposit, whilst we have a positive outlook on the traditional kaolin markets, we're also looking at the uses for kaolin in decarbonising existing industrial processes. So one that we're working on at the moment is using kaolin in cement to replace the clinker in the cement manufacturing process. And that has a direct reduction in the CO2 component of the cement manufacturing process. The cement industry is about the 7th largest emitting industry of CO2 globally. So anything they can do to reduce their emissions, they're very keen to look at. So the next steps on that, again, waiting for the assays to come back. We've got the test work going on the cement replacement material as well. Once we get the assays back, we'll identify the markets that our material is suitable to, and then we can start marketing directly to those higher value markets. So over the next 12 months, we've got a very busy schedule. On the HPA, we've got the micro plant being commissioned at the moment. We've got the pre-feasibility study on the pilot plant. Assuming we get a positive outcome on that, we'll be moving straight into construction of the pilot plant in the third quarter. And we've got the assays on the Eyre Peninsula tenements. The manganese is really the key focus there, but also the rare earth potential is something that we're really keen to find out about. The board management, we've got a very experienced board in all the markets that we're operating in. I've been involved with high purity alumina for the last 5 years. The developer of the high purity technology, Nick Wellham, has been involved in a number of different technologies for high purity alumina. He's developed this and the high pure process and has taken the best parts out of a number of projects that he's worked on over the years, both in high purity alumina, but also in other areas. So why invest in ChemX Materials? We've got a massively growing market in front of us, and that's spread across a number of different industries to do with decarbonisation and the energy transition. The growth in those markets and also the innovation will lead to increased demand for both existing materials and also the development of new ones. And we've got the team and the strategy to be able to take advantage of the opportunities that the innovation that we're seeing will bring up. Apologies for the disrupted presentation. We've got a lot going on. It's a bit hard to put into 15 minutes. So if you've got any further questions or you'd like to talk about anything, please come down to our booth number 38. Thank you very much.
And David, our apologies too. I hope you accept the last extra 2 minutes with good grace. So apologies for the tech up at the back there. Doing our best to swim like crazy underneath the water while seamlessly just gliding across the top. Allan Kelly, can you come and join us, please, sir? Striding from the back there. Look at this fellow here. He's got years of experience under his belt, this fellow. And I tell you this because he's got 30 years in mineral exploration, development, production. He was the founding MD of Durrane Minerals, discovered the high-grade Wilbur Lodge gold deposit at Unm Gold Project in WA. In 2014, this man was awarded the AMEC Prospector Award. He knows his stuff. He is now Executive Chairman at Miramar Resources, which listed back in 2020. And under his direction, he has outlined a potential camp-scale gold discovery at its Iggy JV project back in the Eastern Goldfields. To tell us more, bring us up to speed, would you please make him very welcome, Mr. Allan Kelly.
Thank you, Chrissy, and thanks to RIU for putting the conference on again and giving us the opportunity to come and present. Quick 15-minute presentation. This presentation was released to the ASX this morning, so if I don't cover everything, please look there, and also please come to our booth and talk to myself or Murray, and the Technical Director. So in summary, as Chris said, we listed back in 2020. We're one of the first companies to list after the COVID lockdown, and we've been very busy. I'm going to talk mostly about our Iggy project, which is just north of Kalgoorlie, and we think we've got a very interesting project there, effectively a greenfields opportunity right on the outskirts of Kalgoorlie. We've got a number of targets, including what we think is a new discovery at Marylebone, and looks very much like the Padding deposit. And we just did a capital raising over the weekend, and that money's going to go against the Iggy project. So I'll talk a bit more about that in a minute. Aside from Iggy, we've got a number of other opportunities in WA, gold, ISCG, and also nickel copper PGEs, and a little project called Langwell, where we think there's potential for rare earths as well. We've been very busy, so we're always out on the ground and generating news flow from our programs. We've got a tight capital structure, low EV, and well funded, and the board's got a track record of discovery, development, and production. So in terms, I won't talk too much about this slide. I'll just say that there's some numbers there which are pro forma based on the raising we just did. So with 70 million shares on issue and a market cap of only about $12 million, I think we're, pretty good value when you see the projects that we've got. So this slide shows a real good summary of where we are operating in WA. Most of the focus is down in the eastern goldfields around Kalgoorlie with our Iggy, Glandular and Randalls projects. And then we've got some more sort of early stage stuff up in the Gascoyne or the Capricorn Origin region, including some nickel copper PGE targets and also a really interesting looking IOCG project at Whale Shark. And the Langwell project sits out here sort of in between Deflector and Golden Grove, and hopefully I'll get to talk a bit about that as well. So Gidgee, fantastic address. If you use the real estate analogy, I think this is the cheapest house in the best street. We're 15 kilometres from Kalgoorlie on the highway, and we're surrounded by Northern Star on two sides, Norton to the north of us, and Evolution out at Kundana and Mungari to the west of us. What we really liked about this project, it sits on this major regional structure called the Barara Shear Zone, and that starts down to the southeast of us, where Horizon are developing the Barara and Golden Ridge deposits. It comes up, does a jog on our ground, and then heads up to Paddington, 4 million ounce deposit, and then keeps going up to Bardock, who have just been taken over by St Barbara for what, $150 million. So great location, and you would think that something so close to Kalgoorlie would be really well explored, but there's a 40-metre sort of layer of transported material that sits over the top of the prospective geology. And a lot of the previous drilling never ever got through that layer of transported material. So when I say it's a greenfields project, that's why, because there's no effective deep drilling pretty much over the whole project. It's also got nickel potential. We've got a unit called the Highway Ultramafic, and that's the same ultramafic unit that hosts the Scotia nickel deposit, which was mined by Western Mining, and also a project called Saints, which Auroch are developing at the moment. So we've been busy since we listed. We think we've made probably 3 new discoveries in the central part of the Gidgee project. At Marylebone, we've got about a 2 kilometre long footprint open to the northwest, multiple air core results over 5 grams per tonne and up to 13 grams per tonne. And it's a lookalike for Paddington. It's got the same geology, the same structural setting, and the same scale as Paddington, which is a 4 million ounce deposit, about 10 kilometres to the north of us. As we were doing that drilling at Marylebone, we got a couple of sniffs at a prospect just to the west, which is now called Blackfriars, and that sits on the contact between a basalt unit and a sedimentary unit, and there's a little porphyry intrusion right on that contact. That's about 1 kilometre long, with all 1 gram hits along it, and at the northern end, we've got an 11.8 gram hit at the end of the hole, which was pretty exciting. And that's got the same scale and size and geology as the Aphrodite deposit, which is one of the deposits that make up that Bardock camp that St Barbara just took over. And that's a 1.7 million ounce deposit. Again, when we were drilling Blackfriars, we started looking at some historical auger data which crosses the highway. This is the Goldfields Highway running up through the middle, which goes up to Menzies. And we saw this auger anomaly that had never been drilled. So we've actually just finished an air core program testing that. And we've got another one of these intrusions within a 1 kilometre long gold and arsenic anomaly. So we're waiting on assay results for all these yellow holes which have tested this Blackfriars and highway anomaly. So we're pretty excited that we might have 3 or 4 of these parallel things with really good scale potential. This is the model we're sort of working towards. The map on the right is a simplified sort of interpreted geology. So the Barara Shear is this main sort of bit here, and it's a sequence of mafic and ultramafic rocks in the Barara Shear with all these north-south cross-cutting faults. And then you've got this basalt unit and then black flag sediments, and then a porphyry sitting on the contact there. And then in the black flags here, you've got another little porphyry sitting there at highway. And this is a direct comparison with a number of multi-million ounce deposits at the same scale. So that's Paddington, Mount Charlotte. So Paddington's about 4 million ounces. Mount Charlotte's about 8 million ounces. And then Randalls, which is a banded iron formation. But this is the same scale as what we're seeing here. So a very simple model, but we think we could be onto something really special at Gidgee. As I said, we did a capital raising over the weekend. We had about $2 million in the bank. And based on the results so far at Iggy, we could have put that whole $2 million at Iggy. But that would have then meant that we couldn't do work on our other projects. So we took the opportunity to do a placement for $2.5 million or $2.4 million, and that's going to go against Iggy. And we've got a number of programs lined up across a number of targets over this sort of 15-kilometre strike. We've got some early stage air core planned for the northern and southern areas, infill on some of the targets we've already defined, and some deeper drilling on a thing called 8 Mile, which sits right next to a deposit that Northern Star are developing, and also the jog, which sits in this obvious jog here. So we're going to be busy over the next 12 months again with a number of programs, and we're pretty much been non-stop at Iggy. Our second project in the Eastern Goldfields is Glandular. This has sort of taken a little bit of a back seat while we've been busy at Iggy, but I think this is just as prospective. It's got a few more logistical challenges because a lot of it's on the Salt Lake. It's about 40 kilometres east of Kalgoorlie, and it's directly north of where Black Cat are building their mill here at Majestic. So you've got the lake here, you've got this little granite intrusion underneath the lake, and that looks very much like what you see at Majestic. There's some historic high-grade results on the edge of the granite here at what we call Glandular East, including hits up to 4 metres at 44 grams per tonne. And the only thing that's stopping us from getting out there at the moment is the availability of a lake rig. So as you probably understand, rigs are pretty scarce at the moment. Lake rigs are even scarcer, and lake diamond rigs are even scarcer again. So we're in the queue for a lake rig, and we'll get out there as soon as we can. This is Langwell. This is a little project which sits in between Deflector and Golden Grove. It's a very complexly folded greenstone belt. There's not much outcrop there. When we started looking at some of the historical data, in the northern part of the project, there's a whole heap of pegmatites. There's about 50 pegmatites here that the Geo Survey of WA recognised, but they've never ever been sampled for either rare earths or lithium. So we had a look there and thought there might be some lithium or rare earth potential. We really like the project for gold because there's a number of auger anomalies that are sort of 3 to 5 kilometre long auger anomalies in the southern area. And the only drilling on the whole project is about 5 air core holes here. And one of those hits some pretty anomalous rare earths, I think 4 metres at 1500 ppm. So we've got some guys heading out there next week to go sample all those pegmatites and have a look at those drill holes. And we've got an air core program lined up, which will cover this sort of southeastern area, and we'll be assaying that for gold, copper, rare earth, and lithium. So watch this space when that program happens. We've got a couple of earlier stage projects up in the north in what we call the Capricorn Origin. This is sits between the Pilbara and the Yilgarn. It's one of these Proterozoic craton margins that people are exploring now. These things host a lot of big deposits, so things like Telfer, Nifty, Tropicana, Nova, and you probably throw Julimar in there as well, because that sits on the sort of margin of the Yilgarn. We've got 2 projects up here. Our Whale Shark project sits off the end of the Gascoyne complex under about 40 to 100 metres of cover. And then we've got a whole series of tenements here in what we call our Bangamore project, which we think are prospective for nickel copper PGEs, similar to a Nova or a Raglan or even a Boise Bay sort of model. There's only a couple of real sort of decent operating projects up here. You've got the Abra project down here, copper, lead, zinc, and you've got Yangibana, which is the rare earth discovery. But this whole sort of Capricorn Origin is pretty well underexplored compared to a lot of these other Proterozoic origins. So just quickly looking at Whale Shark, as I said, this is a very large target sitting under about 40 metres of basin sediments. It's a big folded biff that's been intruded by granite, and we thought it had potential for iron oxide copper gold, so like a Prominent Hill, Carapatina, Ernest Henry sort of model. The basement's quite shallow, a lot shallower than some of the projects in South Australia where I've worked previously, where you're looking through 5 to 6 to 1,000 metres of cover. And even something like Javieron up in the Patterson was about 450 metres below cover. So what we did is we did some soil sampling, and we analysed the soil samples by MMI, mobile metal ions, and we got some really nice copper, uranium, rare earth anomalies. And then we infilled those on a couple of areas. These two areas here were infilled down to sort of 250 by 250 metres. And those copper, uranium, moly, tungsten anomalies got even stronger again. So we're planning in the middle of the year when it cools down a bit up around Onslow to get an air core rig out, and we're just going to do what we call interface drilling. So basically like subsurface soil sampling using the air core rig. And we're hoping to find something like an Ernest Henry sort of size target that we can then go back in and test with deeper drilling. The final project I'll talk about is our Bangamore project. It's prospective, we think, for nickel, copper and PGEs. This map on the left is a map that was put out as part of an atlas by Geoscience Australia back in 2016. And it was for nickel prospectivity for the whole of Australia. And this is the map that Chalice used to focus in on the southwest and make the Julimar discovery. And I've sort of been interested in this area for quite a while. So I started looking at this atlas again and pulling some data together for the Bangamore area, which you'll see also shows up as a nice big, bright spot here on the map. Sorry. And recognise it had a lot of the sort of key signatures that you need for a Proterozoic craton margin style nickel deposit. And this little cartoon on the left is a very good sort of summary of what we're looking for. We've got a basin there with some big faults on either side. We have these dolerite sills that come up and then intrude into the sediments. And when they pick up sulfur from the sediments, they can then drop that out as nickel, copper and PGE sulfides. So we've got the most advanced of these, I guess, is like the proof of concept. This is our Mount Vernon target. There's a whole series of these dolerite sills intruding into the basin. There's some historic PGE soil anomalies from people like CRA back in the 90s. So we flew an EM survey here in January and came up with a whole heap of late time EM anomalies sitting on that main dolerite there. And over the next few months, we'll get up there and do some soil and rock chip sampling and see if we can prove up the concept. And then we will get out with some EM. I'm going to skip forward a couple of slides and go straight to the end. The summary, we think we're in a really great position. We've got a potential new gold camp at Iggy. There's potential for multiple discoveries there of a decent size, and we're well funded for that exploration drilling now following the raising we just done. But aside from Gidgee, we're really active across a number of projects. We've got high-grade hits at Glandular. We've got a great ICG opportunity at Whale Shark, and also I think we're first mover in the Bangamore. Looking for nickel, copper, PGEs. Importantly, we've got a small team of people that have done it before, and we're out on the ground. And also, a small, share register and low EV means that if we find something, and there's a lot of upside in the share price. I think I'll leave it there, and please come and see us in our booth, which is number 66. We're pretty much right in the middle of the main room out the back. Thanks very much.
Good on you, Allan. Thanks so much. The busy geologist. You need me more geologists or just you? Good on you. Altech Chemicals is our final presentation before lunch, and they are not opening the lunch until we walk out of here. I've already gone out and spoken to chefs, so don't panic. Now, Altech is at the cutting edge of developing battery materials for a lithium-ion battery future. They are successfully importing silicon in graphite anodes to produce higher energy density batteries. Managing Director Iggy is here to present their game-changing technology to you all.
Welcome to the Lithium-Ion Battery Update. An Australian company has finally cracked the silicon code and produced lithium-ion batteries with 30% higher energy capacity. The company has utilized its game-changing alumina coating technology that successfully incorporates silicon into the graphite anode of lithium-ion batteries. The result is a 30% high energy battery with improved cyclability or battery life. This next generation lithium-ion battery technology is destined for the electric vehicle industry. Tesla has announced that the required step change to increase lithium-ion battery energy density and reduce cost is more silicon in battery anodes. For this to be achieved, high energy capacity silicon needs to be introduced into anode chemistry. Silicon has 10 times energy capacity compared to graphite. In the words of Elon Musk, this is the most promising anode material. However, metallurgical silicon is unable to be used in commercial lithium-ion batteries today due to two major technological barriers. Silicon expands up to 300% in volume during battery operation, causing swelling, fracturing, and battery failure. The second challenge is that silicon deactivates up to 50% of the lithium ions in a battery. Called first cycle loss, lithium ions are rendered inactive by the silicon, immediately reducing battery performance and life. Industry has been in a race to crack the silicon code. But Australia appears to be at the forefront of the race. This innovative Australian company's game-changing technology delivers alumina-coated silicon particles, which resolves both the swelling and first cycle loss capacity problems. A 30% higher energy capacity battery will mean significant cost benefits to the battery and electric vehicle industry around the world. Phase 2 of research and development work will see the company strive beyond the 30% energy increase. The company has already commenced a pre-feasibility study for a construction of a 10,000 tonne per annum battery materials plant in Saxony, Germany, to service the burgeoning European lithium-ion battery market. And that's the lithium-ion battery update.
Firstly, let me introduce you to the concepts of a lithium-ion battery. So when you charge a lithium-ion battery, the lithium ions go from the cathode to the anode. And when you discharge the battery, all the lithium ions go back. What a lot of people don't realize is that about 10% of the lithium stays on the anode side and it becomes inactive to the battery. That's just called the first cycle loss capacity. And what happens is it forms an SEI layer around the graphite particles and it renders the lithium inactive. So imagine 10% of your lithium becomes inactive before the customer even gets the battery. That's a problem. Also, in the life of the battery, the SEI layer cracks, exposes new sites on the battery, and more lithium is absorbed onto the battery. So there's a degradation of lithium during the life of the battery. So this is a problem the industry's been facing, and there's a lot of research around that shows that high purity alumina coatings resolve this problem. And there's research from all around the world that shows that alumina coatings resolves the cycling stability, the high rate performance, the fast charging capability, and it also affects the safety of the battery. This is interesting. So this is a typical research that shows a normal battery without alumina coating in the graphite. And then this is a battery with alumina coating in the graphite. And you can see after 200 cycles, the coated alumina has 10% more energy capacity. Now, this is interesting about safety of the battery. We've heard of thermal runaway. On the left-hand side is a typical battery, and what they do is they do a nail penetration test. And what happens is the battery starts to have thermal runaway, and you can see from the picture, it just catches a light. On the right-hand side is a battery that is coated with alumina, and virtually the temperature only gets to 90 degrees, and you can see from the picture, the battery stays intact. So coating graphite with high purity alumina helps with battery stability. Now, let's talk about silicon. Silicon is a very promising anode material. And sorry, let's talk about the coating of alumina. There are three ways to coat graphite with alumina. You can have atomic layer deposition, very expensive process, coating it with solids, or coating it with a liquid. Our process is a liquid method. So essentially, we take a graphite particle, we coat it with alumina at 2 nanometers, very fine layer. So a nanometer is about a millionth of a millimeter. And this layer doesn't stop the lithium from going through the battery. So it doesn't stop the performance of the battery, but it resolves that first cycle loss. And this is what it looks like under a very intense microscope. You can see the graphite particles, and you can see that white layer around it, how continuous that layer is. It protects that particle from forming the SEI layer. On the right-hand side is some of what the industry do. You can see how thick the layers are and inconsistent. So we believe our process is a much cheaper process. It's easier to scale up and commercialize, and it resolves this first cycle loss. But what we're doing is applying this technology to silicon. As you mentioned in the video, everyone is trying to get silicon in the battery. So if we are successful, this is what the curve should look like. The life of the battery extends out and hopefully higher capacity as well. So why is silicon such a promising anode material? It has 10 times the energy capacity than graphite. So from a layman's point of view, there are 10 times more sites that the lithium can sit on. So it's a very promising anode material, but why isn't it being used in commercial batteries today? Essentially, there are two major problems. The first one is that when you put silicon in the battery and you start to operate it, it expands 300% in volume and it actually fractures. So you get this delamination happening. The battery swells up. The other problem is the first cycle loss. Instead of 10% like graphite, it's probably close to 50% because there's so much sites that it can absorb lithium on, it absorbs the lithium and then makes it inactive. So what's the potential? Today in a graphite battery, 6 carbon atoms hang on to one lithium ion. If you use one silicon atom, it hangs on to 4 lithium ions. So if this was a typical battery and you put some silicon in there, this is how much lithium ions it can hold on the anode side. So you can see the potential for the lithium-ion battery with silicon going out. Now, a typical graphite battery would be around 300 milliamps per hour per gram. If you add 10%, it nearly doubles the energy capacity. You add 20%, it nearly triples the energy capacity. So you can see the prize at the end of this, of resolving this problem. And what does that mean for an electric vehicle? So a Tesla travels some 423 Ks on a single charge. If you can add 10% silicon in there, it'll travel 680 kilometers on a single charge, 20% up to 940 Ks, 30% up to 1100 Ks on a single charge. Now, of course, the car manufacturer don't have to give you 1100 Ks. You only need 400 Ks. So they can downsize the battery. And that's the significant advantage of silicon. The cost of batteries come down, the CO2 footprint comes down, and so on. And what the industry has been trying to do is to resolve the fracturing problem is they've been using smaller and smaller silicon particles, but the cost is very expensive. Our technology is using regular size silicon particles, but coating it with alumina coating. 2 nanometer alumina coating, and that resolves the first cycle loss, and it seems to resolve the expansion problem as well. What we've done in the lab is created this, we put it in batteries and run it for many cycles, and we produce a battery that's 30% extra energy capacity. And our technologists are working to improve that. So this is, from a technical point of view, this is what a non-coated silicon graphite material, the energy density drops away very quickly because of the fracturing problem. But when we coat this with alumina, this is what happens. We get a better energy density anode material. Now, this is significant for the industry. It's game changing. So we are fast tracking our commercial process to get this into production. And we announced this last year, a 30% higher energy density battery, but we're now moving to a commercial plant. So essentially we buy silicon, we buy graphite, we don't try to mine it and make it. We coat it with our alumina, and we produce a product called Alumina anodes. The plant itself will be in Saxony, Germany. We're very focused on Europe. We think that the next decade or two will be in the lithium-ion battery story will be about Europe. And the reason for that is all driven by EU regulations. So all the car companies in Europe have announced all electric by 2030, 2035. And the reason they have to go all electric is they will get fined 2,000 euros every car if they go above the 95 grams per CO2 per kilometer. So it's not a decision that they have to go to all electric. So to support that, there is amazing amount of battery production been announced. So on our PFS for this plant, we want to build 10,000 tons per annum of silica alumina anodes. Investment is around 95 million US, not a large investment, but the NPV is something like 500 million US with an internal rate of return of 40%, high margin material. It should generate around 63 million EBITDA every year. So the economics is fantastic. And we're now proceeding to a DFS. Because we're supplying in Europe, it's important that all our materials come from Europe. So we have an offtake agreement with SGL Carbon, will supply us with the graphite, and a group called Ferroglobe will supply us with the silicon. Very important that it's European-centric. We're also committed to build a pilot plant, and we've got this warehouse next door to our site that we are going to produce a 120 kilogram per day pilot plant. And the reason for that is that we got to get to commercial samples to the end suppliers to do their long-term testing in the batteries. We've got 2 NDAs with 2 European automakers and an NDA with a European battery maker. So very exciting technology, game-changing technology, and this, if it works out well, will change the lithium-ion battery industry. Thank you.
Iggy, that is much unlike you. I'll return back here. I was going to say, that's most unlike you to be on time, but you jam-packed that presentation. I hope you enjoyed that, everyone. We're going to take a break for lunch, 45 minutes, and we'll ring the bell and get you all back in here. And go and have a chat with Iggy while he's here in the room.